Good afternoon, ladies and gentlemen, and welcome to the Trinity Exploration and Production PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet company dashboard. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from Trinity Exploration and Production PLC. Jeremy, good afternoon, sir.
Good afternoon. Thanks, Jake. Welcome all to Trinity's operational update, which is focused on Jacobin. Presenting with me this morning, by the way, I'm Jeremy Bricklasting, CEO of Trinity. Presenting with me is Mark Kingsley, our Chief Operating Officer, sitting to my right in our Cole San Fernando offices. And joining us from Reading in the UK is Julian Kennedy, the Chief Financial Officer. Before we dive directly into the operational update, allow me to briefly introduce Trinity to those who may be new to this presentation. We are quoted on AIM as governed by the London Stock Exchange. All of our oil is produced in Trinidad and Tobago, and we operate across 10 licenses, both onshore and offshore in shallow waters. We produce between
Ladies and gentlemen, please do just bear with me.
Plus some low-risk developments, total to 66.8 million barrels, and exclude significant prospective upside. During today's update, we will lay out the life cycle of Jacobin from data acquisition to first oil, give a detailed operational update of the well, and we'll also lay out the next steps in Jacobin's testing plan, which will drive our near-term investor communications. After the presentation, we'll move to a Q&A session, during which we'll attempt to go through all of the questions that we received, both prior to and during this presentation. Any questions that we don't answer during today's session will be answered afterwards and posted online in the usual manner. Just going to flick across to the next slide.
Ladies and gentlemen, please do just bear with us while we reconnect to the team. Thank you.
Hi, Jeremy. If you could just reconnect your microphone, that would be great. We can see you connected, but we can't hear you, sir. Ladies and gentlemen, please do bear with us just while we reconnect Jeremy. Jeremy, thank you very much indeed. Let me just request control. Hi, Jeremy. Can you hear us?
We can hear you fine.
Lovely. So we just lost you momentarily. I'm going to keep your camera off just to conserve the bandwidth. But if we do lose you again, we might need you to dial in. But if I could ask you to start back on the slide where we're showing on slide page number 2, that'd be great. Thank you.
Thanks very much. And apologies to those listening in. We seem to be having some technical difficulties, but let's press on. Before Mark takes you through the operational aspect and the next steps for Jacobin, I just want to recap the path and speed at which we proceeded from identifying Palo Seco as a strategic option, building a plan to test our strategy, identifying a drillable structure, and successfully drilling a 10,000-foot well into that structure, the result of which has proven our deeper play concept. All of this was and will be funded from the balance sheet without tapping into our working capital facility or requiring any equity bridge. Jacobin is a result of focus and determination across multiple disciplines, which ensured safe delivery. The timeline that you see on this slide here reflects moving from data acquisition to first oil in 35 months, which compares favorably to the usual cycle of 4 to 6 years. The 3D seismic that we acquired in late 2020 was not of the best quality. We had to place and find world-class geophysicists in sit with the dataset, which took time and financial investment. It became apparent during 2021 that Palo Seco had significant potential, even though it seemed to have been exploited since the 1960s by a variety of operators. Our analysis showed shallow areas of interest, but more interestingly, deeper structures that were undrilled. This is when we developed the concept of the deeper hummingbird play. On the back of this, we identified PS4 as a key property within the Palo Seco area, and we eventually acquired the property, and this is where Jacobin was actually drilled from. We were then prepared to drill the exploration well and commence drilling in May of this year. The well did take longer than planned due to a number of drilling challenges in getting to 10,000 feet. It's the first time that we've drilled to 10,000 feet as a company. But in August, we were able to announce that we had discovered 3 oil-bearing zones in the exploration section of the well. That was a better than planned outcome, and as the most likely success case was that we would find 1 oil-bearing zone only. First oil occurred during September, and we've now entered into the testing phase, and Mark will go on to describe that.
Yes, good morning, everybody. Mark Kingsley here. So yeah, just picking up from where Jeremy left off, the well itself, was challenging to drill, but we achieved TD, and then we brought on the workover rig, the heavy-duty workover rig, to run the completion and perforate. It's fair to say that traditionally in the oil and gas industry, an exploration well wouldn't always be converted into a production well. So there are some challenges and complexity around that. But in terms of trying to make some use of the well that we've drilled, we obviously wanted to try and gain production. So the approach we've taken is a conventional one of basically running a completion with tubing conveyed guns and perforating the lowest zone. And you can see on the diagram on the right hand side, you can see that's what we call the lower cruise 3 zone, which is shown in blue at the bottom of the right hand side. When we perforated, we were expecting a sort of wellhead pressure in the region of 2,500 psi, and that's what we saw. So in terms of the pre-drill expectations on reservoir pressure were sort of matched, and so we were encouraged by that. Obviously, we had healthy pressure at the surface, and we opened the well up. And over a sort of a 7-hour period, we saw initially, pretty healthy rates of production. And obviously, there's a fluid in the well to be displaced first before oil starts to flow. But the rates declined over that period, and over time, we were able to see that unfortunately that was due to the influx of sand. Now I want to be clear that the presence of sand per se is not something unusual. We had in our risk assessment of the well sort of thought there would have been some potential for sand, but quite low. But as it happened, what we've subsequently found is that this sand is very fine. So it's basically almost like a talcum powder type material that's come into the wellbore. And that bridged the production tubing, blocking the sort of production tubing about 1,000 feet below surface. So this is an operational issue. It's not a fundamental issue, impacting the sort of viability of the well at all. But to clear that blockage, we attempted with conventional wireline tools, things that are readily available on the island, but had no success with that. So some of the time I know there's been some comments about why is it taking so long. Well, Trinidad is a relatively small market. There's there is equipment here, but unusual equipment is not necessarily here or available. So we had to secure a cold tubing unit, which we managed to find. That item is on the island. It's had some modifications to make it appropriate to run into a well of 10,000 psi rated standard, which is quite unusual for Trinidad. But that core tubing unit is now being made ready. It's going through its statutory inspections with the state oil company, with the ministry, and we're looking to start to move that to the site over the weekend. So I expect to be on location on Monday, running in with the core tubing unit. I'm confident that we will clear the blockage, and then basically we will restart the startup operations. So the second time around, we will be even more cautious than we were in the first time around. We'll be using a smaller choke size. We'll be taking sand measurements every 15 minutes to make sure that we don't see any more sand being brought in. And our expectation is that this should be a well that we can bring in production. This is not unusual for Trinity. We have sand produced in some of our other assets, and a good analogy here is our well on the west coast, ABM 151. Where we had reasonable production, but we had sanding issues. So there were some operational challenges to get the well up and running, but we basically found the sweet spot of the operating envelope and are able to produce that well quite happily today without any issues. So I expect that that's where we'll get to with this well. So the plan is then to test the Lower Cruise 3 for a period. Let's see what the sort of prospectivity is, productivity and sustainability of the flow is. And depending how that goes, we may either suspend it and then move uphole, and if it's poor, then we'll potentially abandon it and then again move uphole. What is shown there, the second sort of lowest horizon in the 8.5-inch hole is the Lower Cruise 1. There are two, as Jeremy said, prospective zones in there. So the plan, once we've finished on Lower Cruise 3, is to move up to the Lower Cruise 1 and perforate the two zones there and flow them to surface, again using a very traditional sort of methodology. I know some questions have been asked about why don't you commingle all three zones. That's been considered, but unfortunately the pressure regime, as you can see from the chart, in the lowest zone we've got 7,500 psi. In the Lower Cruise 1 we've got 4,500 psi. So you've got a big sort of 3,000 psi pressure delta there, which would potentially create cross flow and other operational issues. So really that's not something that we have considered as practical. But I stress that these are all normal operational issues. It's taken a little bit more time. Some of that is linked to the supply chain challenges we have on the island, but that's something that we are used to dealing with, and in the coming week, hopefully we'll have some better news, and obviously we plan to give an update in the next month or so.
Thanks, Mark. I'll just slide on to the next one, and Julian, if you would take us through this, please.
Yeah, I'll take this. There were a number of questions in the pre-submitted Q&A around communication, and I think what we're committing to here today is that we will be updating the market and shareholders more frequently as we move through the rest of the process on Jacobin. As Mark alluded to, we will put something out once the coiled tubing unit has been on the well site and done its thing, and then as we progress with the Lower Cruise 3 zone, we will continue to inform the market. There was also a pre-submitted question that asked about AIM Rule 11. I'd just like to state that throughout the process, we have and do consult with our Nomad on announcements. And as Mark and Jeremy mentioned, this is not the issues with Jacobin have not been unusual in terms of operational activity on the island, and it was with that regard that we didn't put something out when we achieved first oil on at the end of September. But we recognise that there is an appetite for information. We are committing to come back with an investor presentation that will cover the status of Jacobin at that time and a broader Galeota update in a month, in the week commencing the 27th, and we will finalise dates for that. We'll also arrange an in-person session in London for retail investors. We then anticipate, keeping the market fully informed as we potentially produce out the LC3 reservoir and then move uphole into the two other oil-bearing intervals in Lower Cruise 1. And then the back end of this slide just indicates the Q4 operational update at the back end of January.
Thanks, Julian. This is a pretty brief presentation, so I'll just recap as to where we are. I mean, the sand plug, as Mark has mentioned, this is standard operational practice for us. So dealing with the sand plug is something that is not by any means permanent. It has not impaired the well, and we will be, subject to getting this power tubing unit on over the weekend, as Mark has mentioned. We'll be moving through that fairly quickly and then providing an update as to the success of that. The Lower Cruise 3 is quite interesting. We didn't expect it to flow as it did. We'll see how it continues to flow, but even more interesting is the Lower Cruise 1. So this well has, a range of potential, and notwithstanding, it also has in the development, like, the forest sands and the upper cruise sands, which we also know are oil bearing as well. The cost of the well certainly has gone over and above what we thought it would do, but this is something that we're able to absorb through the existing operating cash flow, which is driven through managing production as closely as we can and keeping a close eye on our cost structure. The underlying business remains resilient, irrespective, and those cash flows are what we will use to continue to drive not just Jacobin, but further investments into the business. And finally, I just want to touch on Galeota, because the reserves in Galeota, are quite transformational for us. And the Petrofac study that actually Mark led has helped to validate some of the development concepts that he thought about when he came in here originally. And they have lower capital intensity, and the result of that is that the scoping economics, with emphasis on scoping, look quite encouraging. And these will only stand to be further improved based on what we think, the proposed SPT reform that the Minister of Finance announced on the budget that he read on October the 2nd, sorry. We will provide a further update on Jacobin, but we will be providing updates for Jacobin as we go, but also inclusive of a Galeota update in our wider corporate investor presentation, which will be during the week of the 27th of November, as Julian mentioned. I'd like to thank you for your attention and apologize for the technical difficulties that we encountered a little bit early on. And I look forward to further engagement, in fact, with an in-person event later on in November, where I hope to meet, whoever can attend that. It would be great to meet you in person and continue this discussion. Let me now hand you back to Jake to close this part of the session off, and then we'll resume the Q&A.
Perfect. Jeremy, Julian, Mark, thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Jeremy, Julian, Mark, we did receive a number of pre-submitted questions ahead of today's event, as you did kindly already mention. And we've also received a number of questions throughout your presentation this afternoon as well. So Jeremy, if I may just hand back to you, perhaps to chair the Q&A session with the team, if I could just ask you just to read out those questions and give your responses where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Thanks, Jake, and hopefully everyone can hear. Jake, I mean, if you want to try the camera, it'll be good. If not, we can switch it back off if it creates any issues. We received a number of questions in advance of this, so thank you very much for taking the time to do so. We tried to organize these into various themes. Certainly on 1 minute. Certainly Jacobin was the heart of those questions, and the best person to answer those are Mark. So I'll read some of the questions out, and Mark will give his thoughts on those. Question 1: to what degree is the sand in Jacobin a long-term issue which may inhibit production from the existing deep and other two deep sources?
Yeah, and I think we addressed that in the presentation itself. I think we see it as an operational issue, but it's not something that should fundamentally change the ability to produce the well long term. So it's something now we've seen it in the Lower Cruise 3 with the Lower Cruise 1. We will be more aware of it, but honestly, the sort of the material that we've seen from the samples we've recovered from the well are so fine that the sort of traditional sand control measures like screens, sand screens, and/or gravel packs would have not stopped that anyway. So this is something we'll manage around by production sort of optimization.
Nice one. Is there a worst case date by when definitive flow rate data about Jacobin will be available from all the identified zones?
Okay, so for Lower Cruise 1, Lower Cruise 3, the one that we have perforated, I'm saying that clearing this blockage should be basically early next week. The cold tubing unit is moving on. We expect to be able to clear the tubing within a sort of a 12 to 24-hour window, and then we will be starting up quite quickly after that. And then so I would say sometime in the first couple of weeks and before the investor presentation that we've mooted for the end of November, we should be in a position to give an update on LC3 production numbers and sort of some view on prospectivity of that horizon. For then going uphole, suspending the sort of LC3 and moving into LC1 and perforating that area, I would expect that the sort of the worst case would be within a sort of a 3-month window, so sometime in the first quarter of 2024.
Thanks, Mark. Do you anticipate Jacobin producing from one zone at a time or from multiple zones simultaneously?
To be determined. I mean, I think it depends on the prospectivity of LC3. I mean, we can see it's a relatively thin horizon. It's 5 feet thick, but the initial flow rate we saw coming from the initial perforation was quite encouraging. So I think it's too early to say, but certainly the LC1, the 2 sands in the LC1, I would expect us to produce them simultaneously and to sort of assess what the flow contribution is from each horizon. We'll be looking to run some form of production logging tool at some point in the future just to determine what the split of production is coming from which zone. But to run all 3 initially together because of the hydraulic issues between the pressure differences between the various zones is not feasible technically. So I would say that certainly we could run LC1 2 sands together. That's something we do consider.
Thanks, Mark. There's a fairly lengthy question here that basically asks, why didn't we say something about the sand plug when it did happen? And maybe I'll take this one. From an operational perspective, we looked at what happened. A sand plug is something that we encounter from time to time in our operations. In fact, with the ABM 151 well, when we brought that on, we had to deal with sanding issues, and it took us a few weeks to get that under control. We kept the Nomad close to this, given the nature of the Jacobin well. Because the sand plug was something temporary, and it has perhaps taken some time, but as Mark has explained, the coil tubing units that we have on the ground is not rated for 10,000 PSI, so it had to be modified. The discussions that we had with our Nomad and internally gave us guidance that this is not price sensitive and therefore not something that needed to be released immediately, and that's the reason that we did it. But I think what we hear from shareholders is that keeping you up to date on the progress of the Jacobin on a more frequent basis is something that you are interested in, and that's certainly what we are going to do going forward. Can you give a ballpark estimate of the foreseen final cost of Jacobin? Was it not possible to foresee that sandproofing of the well was necessary? Maybe 2 parts in here. Julian, would you want to take the part about the final cost of Jacobin?
Sure. I mean, at present, we think that the outturn cost is going to be around $8 million US, give or take. And to the end of September, we have spent $4 million approximately of that. We anticipate that some of the cost will be incurred in 2024.
Thanks, Julian. And I think, Mark, you've already answered this, but was it not possible to see that sandproofing of the well was necessary?
I think I've answered that. I mean, I think the presence of sand was contemplated, but the view taken that really it was sandproofing or putting sand screens or gravel packing at this stage on an exploration well where we have no real information from that horizon was probably really would have been overkill. And actually, based on what we've seen, it wouldn't have made any difference given the fine sort of nature of the sand that's come through. So I think we made the right call, and we'll go back in and now we've forearmed is forewarned, and we'll act appropriately.
So moving on to the next category of questions, which deals with post Jacobin, what was the next step for the Hummingbird activity? Some of the questions here are like, what are your plans for further drilling in Jacobin's deep and upper wells? I think well, as Mark mentioned, it's quite unusual to take an exploration well and move to production straight away. We are in a well testing phase that will give us a significant amount of data. I mean, we had a better than planned outcome, but it says that we were uncertain as to what the outcome would have been. It's worked out in our favor in this instance with having 3 oil-bearing zones. We are going to assess the productive potential of each of those zones, and then that will inform any further investment decisions that we take. But certainly, it's a positive read across for the deeper play that we've identified, the Hummingbird prospects. This augurs well for those. And it is also encouraging for Buenos Aires, which has not only these deeper lower cruise plays, but also the upper forests and upper cruise zones that we currently produce from in the WD5, 6, WD2, and PS4 areas. there was also occurred in Buenos Aires, but have not yet been drilled. What are our precise plans for the next Hummingbird well? When are you aiming to commence, if so? I guess maybe I'll hand over to Mark from a data and operational preparedness standpoint, and then Julian from a financial perspective.
Yes, well, in terms of data acquisition, we obviously need to gain as much information as we can from this well. Bring that into the team, and then extract the sort of pertinent data, and then let that shape our sort of technical view going forward. And I think traditionally taking output from an exploration well like this and then feeding it back into your next drilling target would take some months. So I would say that we're talking about a potential. Certainly not this year, and probably not in the first half of next year. Potentially a well sometime late 2024 is a possibility, but that's the sort of time frame. Not before that, I would say, because of the need to really properly accept the data, understand the data, and then feed that into our plans going forward to make sure we've kept the lessons learned. And honestly, we learned a lot from the drilling of Jacobin. I think we presented, Jeremy and myself and Julian presented the time depth curve to the State Oil Company Heritage, which kind of showed the plan versus the actual, and the sort of the trials and tribulations we sort of encountered and overcame. And I think they were quite impressed with the sort of the technical approach we take. And I've been involved with many drilling campaigns over the years in many locations, and and I think honestly the contractor and our team did an excellent job to get this well down to TD, given the sort of nature of the job and the nature of the well. And so the current issues are not in the same scale of challenge in my view. So we're very much on the home stretch of this, but it's a bit early to say that we're going to bang straight on to the next one.
Julie,
I mean, as I outlined a few minutes ago, the well cost of about 8 million is more than what we went into drilling this well with an expectation of. That does have an impact on our cash and our balance sheet, as Jeremy mentioned. We've drilled this from our balance sheet. We haven't resorted to any other external financing, not to our credit facility that we have in place, or in extremis running to the equity markets for a raise. So we want to maintain a degree of prudence around our balance sheet, and whilst the technical guys are working up what they've learned from the Jacobin well and how then to optimize where we go next, we are in a process of repairing that balance sheet, building back cash, which of course will be helped by the changes that are being made to the SPT regime for the East Coast, which will generate further free cash next year. So we build back cash, repair the balance sheet, and move forward from there.
Thank you, Julian. We're going to change tack to Galeota, and one of the questions here to you, Mark, is what are you going to do with Petrofac's analysis in a practical manner?
Okay, well, I mean, my career, I've done a lot of marginal field work, offshore, onshore, with a variety of companies, including British Gas and the like. I'm excited about Galeota because I think it's got great potential. I'm relatively new to the business. Obviously, it's taken a little while to get sort of my sort of understanding up to speed on terms of what was done in the past, and take the lessons learned from that. But the FDP that was presented and approved by the ministry in 2021 was a pretty conventional approach, and nothing wrong with it. But ultimately, when you look at the concept that was put forward, it was probably in terms of the scale of the investment, high capex, but also doesn't really address the uncertainty of the subsurface. So obviously we've got a lot of feedback from the data room that was done, and one of the issues was this is a concept that perhaps doesn't recognize the subsurface uncertainty. So we asked Petrofac to basically step back and do a little bit of a sort of a concept recycle. So we called it a concept screening exercise. And I know this is perhaps people listening to this think this is going backwards, but actually you have to go backwards to go forwards. And I think my view is that, the resources that we see in Trintes, the current production area, plus the outer Galeotta area are substantial, and therefore there is a project to be done there without a shadow of a doubt. But it's how you hook them together. And I think the petrified work looked at different concepts in terms of, rather than using fixed platforms, would we use some form of mobile offshore production unit, MOPU style production facility. I've spent the last number of years working on the West Desiree field in Malaysia, which is a MOPU based, jackup based sort of production facility. So that sort of scheme can be, rather than investing capex in that, we can look at some form of day rate, lease rate for that sort of facility. But more importantly is, how do we step through the various stages of developing Galeotta based on the feedback from the data room and the FDP to demonstrate that we've learned the lessons and we can move forward in a sort of structured manner. So the response I'm putting into the question says that really, I think what's forming in our minds here, I think, we'll obviously share this at some point in the not too distant future, is that we see a sort of a kind of a staircase of capability being built from starting on Trintes with some infill drilling. And, Trintes was built in the 1970s, as you probably all know. So the platforms that have been put out there have all got slant conductors. So, this would mean going back into slant drilling, which is kind of unusual, but given how shallow our reservoirs are, how relatively short the wells are, to me, that is perfectly technically doable. And it's something that, if we can demonstrate, from the first infill drilling campaign on Trintes, we can demonstrate we can successfully drill and produce some horizontal wells at reasonable inflow numbers for the wells themselves, substantially higher than basically what we've seen to date on Trintes. That will give us then confidence to step out into potentially putting in a horizontal appraisal well in the outer Galeotta area. Because again, one of the feedbacks from the data room is, the T-Gal well you never tested, you never flowed to surface. I think we do need to, factor into our planning the idea of putting a reasonable horizontal well out into the T-Gal area and then testing it and then doing some form of extended well test, so that we can demonstrate to ourselves and to our investors that, there is sustainable production there. And then we use that well as a keeper well for longer term building a development hub around it. And I think the sort of paradigm shift that I've sort of gone through in the last 6 months is, rather than looking at these as separate activities, actually we try and create a storyboard that shows, we can identify equipment that can be used to start with on supporting drilling on Trintes, which could potentially then be used through the later years on Galeotta, bigger development. And that's not a business that we as Trinity will be, that's not our business today, but it will help, generate the conversations with interested parties in the region, on the island, that, people we could work with to potentially deliver such a scheme. Because I think, the other thing that's absolutely clear to me is that, following the international market in terms of, using traditional, latest generation jackup rigs to come in and drill wells in Galeotta is phenomenally expensive, and you are absolutely hostage to fortune of the sort of the equipment coming in and, what sort of timing that may be. And it's, for a smallish company like Trinity, that is going to be quite a difficult place to be, where we're very much sort of the tail end, falling behind the bigger operators and, paying rig rates today, which are, pricey. So the solution for Galeotta needs to be a sort of an out of the box type thinking. It's got to be based around probably some sort of, reuse of existing equipment. So what we'll call the vessel opportunity. We asked Petrofac to start looking around the sort of that part of the world, or this part of the world, for such equipment. We've identified some possible vessels of opportunity in Mexico, also in the Gulf of Mexico. So we started to have conversations there with various, potential partners about how we could structure, what sort of equipment is available, what sort of deal we might want to do with them. And all of this, I think, leads me to say that, stepping forward into the first phase of infill drilling, to me, looks a very attractive project. We should be doing that. And then stepping out into the outer Galeotta area, there's lots of resources out there. And provided our scheme is flexible enough to sort of recognize uncertainty and potentially move, then I think, there's no reason why we can't do a successful projects in the outer Galeotta area as well. So all of that is very much a joined up thinking and a thought about how we would step through the whole thing, linking all this over the next coming years. So we're sort of building a sort of a 3-year look ahead, which incorporates all those steps.
Thanks, Mark. The rewrite of the Galliots story is something that's certainly interesting, and we'll give you more detail and more focus on that in the investor presentation at the end of November. Within that question, there's also a query on the license term. And just to remind shareholders and investors that the Galliots license was issued on the 14th of July in 2021. So it still has 25 years to run from that period. So not 9 years have elapsed as yet. It's a relatively new license. Change in tact and coming across to Julian, and this is around shareholder and comms. One of the questions is, shareholders feel communication should be improved. Would you consider in the future providing more regular updates on ongoing wells, especially as soon as any deviation from plan is encountered, and also indicate qualitative impact forecast of such deviations?
But I think the short answer there to that, Jeremy, is yes. We have, today committed to more interaction with our shareholder base. There will be more on social media. There'll be more on RNS, and we will be in front of you more frequently.
And complementary to that, even in the past, even during tough times, Trinity has always been prepared to conduct investor meet sessions face-to-face rather than webinar. Current management clearly do not favor this approach, which is most disappointing. When will shareholders again be given an opportunity to meet with management face-to-face?
Well, I think we did host at the AGM. That was a public event, and we had the benefit of one shareholder attending. We sincerely hope that in the week of the 27th we will publicise that, we'll fix a date, publicise that, and we hope to see as many of you there as can attend.
Indeed, I second that. I look forward to meeting with you guys in late November. I'm just gonna, given the time, I'm just gonna run through some of the questions that came in this morning. There's one here that says, why no director buys? And I'll give a first go, and Julian, if you want to complement anything further. Because of the rules that we are, that we subscribe to or govern by, directors and in fact persons discharging managerial responsibility are subject to certain rules, and those rules say that if we are in a period such as testing for Jacobin, we will remain in a closed period as a company, and therefore people such as directors are not eligible to buy at this moment. So once we come out of a closed period and we into an open period, then we will have the capability to buy, but at this moment we are precluded from doing so.
Yeah, I don't have much to add there. I mean, pretty much we've been in a closed period since before the interims since the end of May, with a brief period following the interims. But yeah, the potential Jacobin results mean that we are closed, and we hold that information very close. There was a question around the share price and its decline over the past few weeks. There is no case for insider selling, because any insiders are covered by a closed period and can't and haven't sold. The selling in that market was, as we understand, retail investors selling down.
Thanks, Julian. Ash K asks, how did you get a figure of 80 BOEPD for Jacobin in the going concern section of the half year 2023 results?
Shall I take that? I mean,
Sure.
we run a whole number of cases for all of our production, for Jacobin in various projections. That the case that we ran for the going concern was one of those, in order to specifically address scenarios that the auditors needed to see in order to undertake that going concern, and for the board to undertake that going concern analysis. It's one of many cases, and I think, as Jeremy has alluded to over time, and Mark as well, there is a wide range of uncertainty about the potential outcome for Jacobin production, and we are You know, we're waiting on the operational work to unplug the well and see what we can get.
Thanks, Julian. There's a question by, hold on one second, by Ash K again. Are well declines accelerating? Mark, do you want to?
I think you know, in the written answers, I think there was a question about how do you assess decline. Well, you know, the way we assess decline is by, you know, traditional decline curves, and obviously a lot of our wells are quite elderly. We are obviously seeing increased water cut over time, as that's quite normal. And I think the way in which Trinity's managed its business over the last few years has been extremely aggressive on, particularly on RCP recompletion opportunities. So in terms of perforating additional zones behind pipe and bringing additional reserves in to you know, to kind of not mask decline, but to, you know, compensate for decline. And I think, you know, that's the world that you know, any company would be in, to, you know, to try and manage decline with, you know, and obviously we drilled some development wells back in 2022, I think it was. So but decline is a feature of mature fields. Fact, I wouldn't say it's accelerating, it's just there. It's just, you know, how do you, what can you do, what tools do you have to try and you know, ameliorate the decline? And, you know, RCPs has been a rich area. Obviously we do a lot of workovers here as well. We get equipment failures, so, you know, we have an extremely active and aggressive workover plan. You know, we have 3 workover rigs working, you know, 7 days a week around the clock effectively to reactivate, you know, wells that go down. And, you know, to be honest, you know, some of the sort of production issues, the ups and downs that we see are, you know, weather related as well. So in the wet weather seasons, we see a lot of ESDs, emergency shutdowns through lack of power. Power goes down in the region because of, you know, monsoonal type conditions. So, you know, if you ever get the opportunity to come out to Trinity around the wet season and see what goes on, you know, it's pretty hardcore. Would we love to electrify all our systems? Yes, we would. It'd be something, if we could build our own power distribution systems, that would be fantastic to get control of that. But the reality is that's pretty capital intensive. But I think overall we're doing a very good job of managing decline. You know, we're forecasting for the next 3 years in terms of our production performance, and then you know, building the normal decline sort of assessments in, and then putting up, you know, all our recompletions and workovers in there to try and manage that as best we can. So our decline rates, I think overall, are pretty low. Certainly below, you know, my experience in other locations. I think we do a very good job of managing decline.
Thanks, Mark. I'm just mindful of time, and I'll take a couple more and then hand back over to Jake. Mark, this one's for you, and I think it's important to demonstrate the subsurface strength that we're building. This says Dr. Ryan Ramsuk, formerly the exec manager for exploration and Trinity's competent person, appears to have left Trinity in September. Has his replacement been appointed?
Yes. So the situation on subsurface, you know, I'm obviously relatively new to Trinity, and I've been here about 6 months, but I'm living on the island. So I'm here, and I'm keen that we basically corral all the technical skills around the office here, because, you know, we're in a very dynamic situation in Trinity. We have a lot of wells. We have something like 300 active wells, multiple blocks, multiple horizons, multiple reservoirs. So the head of the subsurface function is a critical role. And so the sort of where I'm going with this is that we have been out on an international search to recruit a long-term head of subsurface, and that person is a lady that's joining us actually next week. She's joining us from Jadestone in Kuala Lumpur. She was formerly with Petronas, Amerada Hess. She's a real sort of solid, you know, 20-year mid-career professional coming to come and work as a head of subsurface. And I think, you know, long term, you know, her arrival here will be a massive step up, because historically we had exploration being, you know, managed by Ryan locally. To be fair, he was here, but the development work, so a lot of the subsurface work was being managed out of London, and that's fine. It can be done, but I think in terms of having a, you know, figurehead here who will be the long-term visible face of the technical face of the company will be a big step forward and a big step up. So I think ultimately, yes, Ryan has left the business, and we wish him well. But I think what we've got is a long-term, probably a better solution long-term. We are looking to have a long-term exploration lead appointed as well. But in the interim, we've asked Alison Dupigny, who is basically well known to Trinity. She's been an advisor to the board for the last 2 or 3 years. She's ex British Gas and Shell in Trinidad, so she's an excellent exploration person. So there's no fall off in the exploration team in the last, because of the personnel change at all. And I think long term we're definitely in a better place. We will be in a better place. And personally, I was talking to Ida last night in KL, so she's getting her bags packed to come to here, as I did 6 months ago. So I think we are moving, and I think there'll be 1 or 2 other appointments that we'll make about strengthening the core of the team here on the island in terms of making sure we've got that subsurface absolutely boxed in with a top professional overseeing that. And I think the other area is obviously the development engineering piece, which is all this development work that needs to be done. Obviously, we need to have some high quality people in that area as well, which is another thrust that we're working on. So maybe in the next couple of months we'll be able to announce maybe 1 or 2 other recruits that I think will strengthen the business overall and give the investors the confidence we've got the right people in the right location to actually move this business forward.
Thanks, Mark. And for the last question by Angus W. Are you planning to do further development wells for Jacobin, or do 1 or more exploration / appraisal wells at the other Hummingbird prospects first? And do you think Buenos Aires offers similar returns or potentially better? I think all 3 of us can weigh in onto this one as we close off. Are we planning to do further wells? I think we need to assess what the prospectivity of Jacobin and the reservoirs are, and Mark's more qualified than I am to speak on that. But certainly what we've seen so far, from our perspective, and we've seen Cavendish write about this and coin this as a play opener, that's certainly how we are thinking about this. Jacobin has gone into the ground it's our first exploration well into this play. We've been, better than planned in terms of the success. There's a lot of data to be acquired, so I anticipate that we will be drilling further deeper wells, whether it will be another development well into Jacobin. I'm sure Julian, from a capital allocation and risk perspective, will probably be guiding towards that. And Mark maybe will be thinking, how can we continue to open this up, a further exploration well on the other side of the fault of Jacobin, which is the Woodstar prospect, looks more and more interesting now. And then when it comes to Buenos Aires, which is a totally undrilled piece of acreage that is next to us with a stronger commercial license, that is, it's not a sub-license, and therefore we have a direct license with the ministry, which means that the commercial terms are better and in our favor. We are the operator, and therefore we have that the ability to act and with the speed and agility that we would like to. Certainly, Buenos Aires is stronger from a commercial standpoint. But then from a drilling standpoint, there are no wells there. And you're talking about a block that is 500 meters away from WD56, which is our largest producer on land. And the geology continues into Buenos Aires, and there are no wells. So one would hope, it's not without risk, it's an exploration rock, but the idea is, to get a well into here. And if we are successful, I'd expect that the commercial opportunity, the economics, will be stronger than within the sub-licenses. Mark, Julian, please feel free to add your thoughts into that.
I think that's clear. Jeremy?
No, I don't think nothing more to add. I personally, excited about all the prospects that we want to drill. Given a clean slate and sort of unlimited finances, we wanted to put wells in all over the place. But that's not the world we're in. But I'm excited about Buenos Aires because as Jeremy says, it's a different license prospect, different license terms, and better control on that. But also the Hummingbird prospects as well, and Jacobin, all of them are things that we obviously will sit down and calmly rank once we've got the data out of Jacobin, and then try and come up with a coherent, well thought through sort of storyline in terms of where do we go next. As we're developing on Galeota, I think we're creating that strong storyline based on stepping through it in a logical manner that people can look at that and say, yeah, that makes sense. You can't jump from A to Z without stepping through various points along the way, and I think that's exactly the world we need to be in onshore as well as on the Galeota block. And I would say also that we collectively in this building are quite keen on the West Coast as well, and it's not been really talked about today because it's not the subject. But the West Coast is a prospective region as well, and I think we have good acreage there and some prospects to be discussed, and really this company has a lot of potential prospects and leads that in a completely 100% no funding restraints, you'd want to drill some wells in a bunch of places. So all these things will need to be looked at and sifted through and really the plan, focus to deliver what we can as soon as we can.
Thanks, Mark. I think we'll pause there now on questions, but any unanswered questions, we will get back to you and post those online. Mark or Jake, I'll hand back over to you now.
Perfect. Jeremy, Julian, Mark, thank you very much indeed for addressing all of those questions that came in from investors this afternoon. And of course, as you just kindly said, we'll be able to give you back all of the questions that were submitted today, as well as any further ones that do come through immediately after the presentation has ended, just for you to review to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Jeremy, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Thank you, Jake. It's very clear to us based on the communications that we receive from investors that there's significant interest in Jacobin and that we can be a bit more interactive and engage with you and let you know what is happening. We have committed to that. You will be kept abreast of Jacobin more often than we have done in recent past. And we are also committed to coming to meet with you in person. The Jacobin well has been very interesting, continues to be very encouraging for us. The operational issue that we face with the sand plug, we are very confident that we're going to deal with that in short order and then get that zone back onto production. But even notwithstanding that, we've got the Lower Cruise 1. Those look even more promising than Lower Cruise 3. So we'll keep you updated. And I think the one takeaway from here is that the management team is certainly committed to engaging with and meeting with shareholders as the weeks progress. Thank you.
That's great, Jeremy, and thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Trinity Exploration and Production PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.